Okay, so one more trade we want to talk about here. Some of you that have been with us for a while, you may know that there's several other scalp trades that we do in the trade rooms. We add on to some of the charts. Some of you have seen Lori's trades. We call them the C's, the SEES trades, and so on. But one other trade that I want to talk to you about is what we call swing trading. Okay, so one more trade to add to your chart. Very easy. We already have trend trading on one chart. We already have chop trading on one chart. And now I want to show you how we can put swing scalp trading on the same chart all in one. These are very easy trades and they are all over the place. They're super easy trades. Now the hardest part about this trade is going to be you, because you're going to want to overcomplicate it and look at a million different indicators and overanalyze it, but you don't have to do that. Okay, keep in mind this is a complete different trade and it's complete different rules than some of the other trades we've talked about here. So you got to keep it simple, and you can look at this, you can back test it, you can look at a chart and you'll just see them all over the place. It's very simple. It's when the market is trending, clearly trending, then the market retraces and then it comes back. Let me show you what I mean. Just a quick example here. Just look at this chart, okay? You don't have a lot of, yeah, we got some I zones on here, but don't even really pay attention to that. You don't have a million indicators in here. Anyone can see clearly that the market is trending where? Down, right? So it's clearly a trend down, and you are coming off of a I zone, okay? So market is trending down, and then where's the lowest point the market comes to? Right here. Right there is the lowest point. Then the market comes up, then it comes back down. And when the market gets back down right here, when the market gets back down to break this low, because this was the low of this trend, right? This was the downtrend. That's the lowest it got. The market popped back up. When the market comes back down and breaks this low, okay, by one tick, you enter the trade and you're going for a 10 tick scalp. Yeah, it popped up a little bit here and then it came down. You got 10 ticks out of it, right? All right, look what happens here. Another clear downtrend. Market's coming down. This is the low, right? Pops back up. See, it's got a higher close here, higher close here. So the market's coming down, pops back up, and then when it comes to here, see, right here, it breaks this low by a tick, and what do? You get in it and you scalp real quick. You're just going for 10 ticks. So the market's coming down, pops up, comes down, you get in it for 10 ticks. Market's coming down, pops up, comes down and breaks that low, the swing low, get in it for 10 ticks. What does it do again? It's coming down. This is now the lowest point. Comes back up. And when it comes back down right here, see it breaks that low, breaks it by a tick, you get in 10 ticks. Really simple. Probably one of the most simple trades I can teach you. We're not using a ton of indicators and trying to, figure out when to get in. It's just very simple. Now, in NinjaTrader, where all of our trading indicators and charts are, there is an actual swing indicator, and it looks like this. You're wondering what these dots are. Well, all these dots are marking some of these swings, okay? Not every little one, but for example, market's coming down. Where's the low? Remember, the low was right there. Market pops up, makes a new high. When market comes down, what does it do? When it breaks this level by one tick, all this is basically drawing a line or dots there showing you where was the last low. So here's the last low. Market pops up. When it comes down and breaks that, boom, and get in, right? Market's coming down, pops up, comes down. It even kind of shows you back here further swings, okay? Not just these little ones like I showed you, but larger swings. This was the previous low. Market came up. When it came down and breaks that low, goes again. So the trend, their swing indicator shows you some of the shorter term and the bigger ones, okay? Now, the swing indicator may not always show you these smaller ones like we talked about, but you can easily see those as well. So it's very easy. I'll show you a couple more examples here. And there is an actual indicator you can have on the Ninja chart. And guess what? It can be thrown right onto the iZone sharpshooter chart. just with it along with everything else. So on one chart, you can see it all. You can see the trend trading sharpshooter rules, you can see the chop trading, and you see swing trades. And these little swing scalps, you can see them all day long. Okay, now keep in mind what we're looking for here is the market to actually be in a trend. We're not taking every little choppy little break here of, you know, of these dots, right? Everybody can see that. That's chopped there. Now here, what's happening? Okay, we've got a downward trend, right? That's pretty easy to see a downward trend. Market pops up. When it comes back down and breaks this, you enter 10 ticks. Okay? Don't overcomplicate it. Very, very easy. Market's coming down, pops up, comes down and breaks this, you get in 10 ticks, right? All right, market's coming down. Here's a little one that pops up. Boom, you can get in there, 10 ticks. Coming down, here's the lowest low, right? As it's coming down, here's a new low. Market pops up, comes back down, breaks this low right here. Boom, 10 ticks. Also, you had a break of this previous low, 10 ticks. Okay? You know, if you're trading something like, you know, oil or the Russell or, you know, something that's $10 a tick, boom, 10 ticks, $100. You know, if you're trading NQ, it's $5 a tick, there's $50. You do 2 contracts, $100. So even between your, you know, trend trades and your chop trades, you've got all these other little trades throughout the day where boom, $100, boom, $100, boom, $100. Very, very easy trades. Now again, we're not talking about just every little breakout by 1 tick in a chop. You're looking for an actual trend. Market's coming down, pops up, breaks it, boom, get a quick 10 ticks. So we're not looking for any other indicators. We're just looking for it to break the high or the low. And when we get in the trade, we're going for 10 ticks profit. Okay, so where do you place? There's only one indicator really we use here other than the swing indicator. Okay, and that can be the trend flip. For example, if you are, and that's to trail your stop. Okay, so for example, the market is coming down, makes this low, pops back up, then when it comes back down and it breaks this low by 1 tick, we enter the trade. And what are we going for? We're going for 10 ticks profit, and then we get out. Okay? Now, our initial stop, soon as we enter this trade right here, what if the market just totally just goes straight against us? It breaks this low, goes 1 tick, we get in, and then boom, market goes up. Where do we initially place our stop to get out? Well, we initially place the stop at the swing high. Okay, let me make sure everybody understands that. Market's trending down. This is the lowest point of the swing. So that's the swing low, right? Then it started coming up. What's the highest point it went to? Right here. Then it started coming back down. So when it breaks this low by 1 tick, we get in, we sell, we go short. And we're looking to get 10 ticks profit and get out. If immediately we get in and the market goes against us and starts going up, we're going to get out right here at the swing high. So that's our first stop. So as soon as we get in the trade, our first stop is right there. Okay? But we trail the stop with the trend flip line right here. Okay? So initially we put our stop at the swing high, but as soon as the trend flip line goes short, that is our new stop. Okay, and we follow that stop until we get our 10 ticks. All right, so if I got in this trade, initially my stop is right here, but if a trend flip line is formed, then my stop is right there. So that way I'm getting in right here. I have a really short stop. It's not that far away. Okay, so I enter the trade. When it breaks it by 1 tick, I'm going for 10 ticks profit. My initial stop is at the swing high, unless the trend flip is already formed. So my initial stops at the trend high, or as soon as the trend flip is formed red, the trend flip line is my stop. So that way I'm going for 10 ticks, but I'm probably only risking, you know, 10, 12, 15 ticks on my stops. It's a very good risk to reward ratio. But if you'll look over your charts, you'll see that there are a ton of these all over the place, all day long, okay? Now, let me pause this video real quick, and I want to scroll back to a couple of our examples from a minute ago. So another key thing about the swing trades is, let's say that you have your IZSS chart open and you're trading, trend trading IZSS. And in the middle of trading, you have to get up and you go grab a glass of water, or you run to the restroom, or you get a bite to eat, and you come back and you look and you go, oh man, I missed this trend entry right here, and I missed this big trend. Well, even if you happen to miss a trend, it's another thing you can do to take advantage of that trend is the swing trading, because you're still in an uptrend here, right? You're still in a good uptrend. So what happened? You got in, the market was going, or even if you didn't get in, what happened? The trend's going up, comes down, right? As it's going up, this is the highest point so far. Market comes down, comes back up right here, and it breaks this high. You get in, boom, 10 ticks, right? Market's coming up, makes a new high right here. Market comes down, comes back up, breaks that, you get in, 10 ticks, right? What happens here? Downtrend, pops back up, you get in it, 10 ticks, you trail it there. Okay, you can see these, right? Market's coming down, market pops up, comes right here, breaks this low by 1 tick, boom. Okay, so not only are they great as fillers between your trend trading and between your chop trading and all that, but if you happen to miss out on a trend, you didn't get in right in the beginning, okay, like here for example, bouncing off an I zone, you've got your trend, say you missed that initial, say you missed this big trend right here, you're like, oh man, look, that'd have been hundreds of dollars. Well, what if you're doing 2 contracts on NQ or 1 contract on TF? Market comes up, makes a high, cops back down, comes up, breaks this high, boom, you get in for 10 ticks. Comes up, right here, makes a new high, comes back down, comes up, breaks that high, boom, you get in for 10 ticks, right? Coming up, comes down, breaks. You can still take advantage of these trends and get in. Market's coming up, comes back down right here. When it breaks the high, you get in, 10 ticks. Comes up, comes down right here, it breaks this high, get in for 10 ticks. All right, so even if you, so like I said, you missed the trade, you can still get, boom, 100 bucks, 100 bucks, 100 bucks, right? But what if you're in this trend trade? Can you add in and still do these little scalps throughout it while you're still in a trend? Sure you can. Okay, it's just extra trades for you to do, all on the same chart. And all you got to do is look at a chart and you'll see them all over the place. Market coming up, making a high, coming back down. When it breaks that high, boom, 10 ticks. Coming down, breaking it, 10 ticks. Comes down, right here, it breaks it, you get in, 10 ticks. 100 bucks, 100 bucks, 100 bucks. Just look at a chart yourself, pull it up and you will see it. It is that simple. Don't overcomplicate it, okay? Don't overcomplicate it. That's the biggest thing you can do, is start looking at a million different indicators and different, you know, or all these 3 lining up colors. This is not the normal I-zone sharpshooter rules where everything has to line up green. Okay, now again, we're not looking at just chop stuff. We're looking to make sure there's a clear trend up, comes back down, breaks it, get 10 ticks. So very, very easy, simple trade. So keep in mind, no other indicators. You're going for 10 ticks. The initial stops at the swing high or low. You're going to trail it with the trend flip, and that's it. Don't overcomplicate it. Okay, we're not using I zones or magnets and volume and deviation, nothing else. It's just very, very simple. So again, I zone sharpshooter, you've got trending, you got chop trades, swing trades, scalping, all in one. You don't have to have a ton of different charts for each strategy and just flipping back and forth between different charts and using all your monitor space. It's all wrapped into one easy chart, easy system package. It'll keep you busy all day.